In my most recent video, I covered the Trump effect and its large impact on financial markets. That is a theme I think is set to continue. And today we just saw the latest development of this Trump effect. There was just a massive announcement about US AI infrastructure. Donald Trump, alongside OpenAI's Sam Altman, Oracle's Larry Ellison, and SoftBank's Masayoshi, unveiled the Stargate Project, a $500 billion initiative aimed at revolutionizing the US AI infrastructure over the next 4 years. This is going to be a new company with big tech partners behind it. They're starting with a $100 billion deployment of capital in 2025, which has already started by building a 1 million square foot data center in Texas. This investment is expected to create over 100,000 new jobs this year. And this is just not some normal tech announcement. It's potentially the biggest investment in AI ever undertaken in the United States, with names like Oracle, Microsoft, and Nvidia already in the mix as partners. In this video, I'm going to discuss how this may impact investing in US tech companies, and I'll share a list of the top 5 stocks that may benefit from this news. That will include a brief stock analysis on each of the companies. But remember, markets can get swept up in hype, especially when the word Trump is involved. So let's try and stay grounded and focus on fundamentals. Is this a massive opportunity for investors and the United States in general? Let's find out and roll the intro. My name is Zach, this is Dividend Data, and you should leave a like and subscribe to the channel if you enjoyed the video. Throughout, I will be using a great stock analysis tool, which is available at dividenddata.com. And we actually have a little bit of an AI product of our own. This is an AI trained with a focus on stock analysis. It's loaded up with institutional quality stock financials and can even search the internet and give you an investor's perspective on news events like this Donald Trump Stargate announcement. It also has an in-depth stock screener where you can find companies based on hundreds of different financial metrics. And that's really just the beginning. So if that sounds interesting to you, you can actually get a 7-day free trial using the link in the description and pinned comment of the video. That is an exclusive deal that's only going to be available for a limited time. So if you want to try out dividenddata.com, now is the time. So first, let's talk about the context of which this news was released. The current build-out of AI infrastructure is insane, with hundreds of billions of dollars being spent already. That comes from hyperscale cloud companies like Microsoft Azure, Amazon Web Services, and Google Cloud, other big tech companies like Meta, Tesla for their self-driving, and Elon Musk's new XAI, which is just scratching the surface. And in terms of what this actually means in the real world, this money is going into training new models, which will be more intelligent and cheaper for use. And even what we already know is possible with large language models and generative AI, there is possibly trillions of dollars of opportunity. And you could argue that that itself could be as big as the internet or the Industrial Revolution. But then if we want to get a little nutty, but it's not even nutty because it's real, there is the long-term opportunity that you could build artificial super intelligence. And when we start to combine these things like the Trump effect plus the whole AI Industrial Revolution, then there definitely could be the risk of some stock bubbles. But today I'm going to try and take a step back and give you a grounded, full picture stock analysis on some of these companies which are directly impacted from this news. And stock number 1 that I will be sharing today is Nvidia, ticker symbol NVDA. And you can basically think of this as the most dominant AI semiconductor company. Their chips are the main backbone powering all of these data centers. And you can see that the company benefited massively from the AI boom coming out of 2022, and their earnings have just surged to an insane amount. Because again, I need to reiterate this, stocks are backed by real businesses. And over time, the value of a stock will reflect the earning power of that business. As you can see, nearly all of Nvidia's revenue comes from their data center business, and that has powered all of this growth. And just in the past 2 fiscal years, they have grown that business from $3.8 billion of quarterly revenue to $30.7 billion in the latest quarter. So if you're analyzing Nvidia stock, all of your focus needs to be on projecting the future growth of that data center business. And really what you need to remember here is that all of NVIDIA's revenues and profits are the cost of another big tech company. You have Microsoft massively increasing capital expenditures to now over $49.4 billion over the trailing 12 months, growing significantly on a quarterly basis at $14.9 billion in the latest quarter. And the Microsoft CEO has stated that this is likely to continue to grow. And a large chunk of that money is going directly to NVIDIA. You have companies like Tesla growing their capex to build self-driving AI data centers, and a lot of that does go to NVIDIA. Alphabet is growing their capex for Google Cloud. And by the way, all of these companies do have their own chips, but still a lot of that money ends up going to NVIDIA because they are the market leader. Meta spends a massive amount on their data centers at $8.2 billion in the last quarter, and they are one of NVIDIA's top customers. And when people are analyzing NVIDIA stock, the number one question is how big that data center business is going to be in the future. Is it going to continue growing at a high rate for years to come? Is it eventually going to slow down and reach a larger steady state? Or is this a hype cycle and it may fall off? Those are the questions which impact the multiple you would pay for NVIDIA stock. And this new Stargate announcement pretty much answers the question that the US is going to be investing a lot in AI infrastructure for at least the next 4 years. And as long as this plays out, NVIDIA is going to have a lot of continued high demand for their chips. So if you're bullish on NVIDIA stock already, this news should make you even more confident in its future. For stock number 2, we have Broadcom, ticker symbol AVGO. Not only has this been one of the most popular dividend growth stocks over the past decade, with a 10-year dividend CAGR of 32.64%, but Broadcom is also poised to benefit massively from high spend of AI infrastructure build-out. They have many products that support the data center, like their networking business, and even more specifically to AI, they do design chips. And Broadcom does have their own AI chip, although it does not directly compete with NVIDIA. They call that the XPU. They also have a business where they help design AI chips for other big tech companies. And in Broadcom's latest earnings call, they highlighted their AI market opportunity as potentially reaching an addressable market of $60 to $90 billion over the next 3 years. That would be for their XPU and networking products. And given this news, you can now be even more confident that AI infrastructure spend is set to increase over at least the next 4 years. So Broadcom is a company that would directly benefit from that. But when we compare Broadcom to NVIDIA, NVIDIA is a much more pure play AI stock. And that's because 85% of the revenue is in the data center and directly AI related. Whereas if we look at Broadcom, AI is actually one of their smaller business segments. In the latest quarter, they had $5.8 billion from their software business, which is 41% of their revenue. And then semiconductors overall came in at $8.2 billion, which is 59% of their revenue. And of that, AI revenue itself was only $3.7 billion. So it's less than half of their semiconductor business. But the exciting part is that grew 150% year over year. I also want to emphasize that when we say their AI business, that's really mostly their networking products, which are not necessarily AI specific, but they are vital in data centers, which is where the AI build out is happening. But the exciting part of Broadcom is that high revenue growth in AI. But if we're comparing Broadcom to NVIDIA, I actually think Broadcom is far more overvalued, given how much smaller that part of their business is relative to NVIDIA. That said, Broadcom has historically been a great investment. The 10-year compound annual growth rate of revenue is 20.69%. The company is a free cash flow machine, with free cash flow per share growing at a 29.97% 10-year CAGR, 5-year CAGR of 12.52%. Broadcom stock is definitely set to benefit from AI, but this is one that leans slightly more towards hype, in my opinion. This valuation is already very high for Broadcom. That said, this stock will likely keep going up over the next few years, given all the positive tailwinds behind it. And with stock number 3, I'm going to pick Microsoft, ticker symbol MSFT. This is an example of a company which will benefit from the increased end use of artificial intelligence. If we look at Microsoft, their two core businesses are intelligent cloud and then productivity and business processes. And you can kind of think of intelligent cloud as providing data center infrastructure as a service. This is to support things as simple as hosting web apps and databases, but also the training and use as an inference of artificial intelligence. So for example, every single time you would write a chat into something like dividenddata.com, Microsoft Azure, which is their version of Amazon Web Services, that is one of their businesses set to grow for decades to come, and they're currently growing at a high rate, 33% year over year. In my opinion, it's pretty obvious that AI is going to be a massive tailwind behind that business, and it will actually be from multiple factors. One, you'll have people using the AI infrastructure for inference and all that kind of stuff, which brings more demand to Microsoft Azure. So that's a new revenue stream being unlocked. But what a lot of people aren't even necessarily thinking about is the compounding effect of businesses actually using AI to increase the rate of software development and creating more products and services and data that needs to be hosted in these kinds of data centers. Microsoft's entire business is kind of built around providing software for businesses and then creating tools to help software development and then providing the infrastructure to bring it to market. You guys need to remember that Microsoft owns GitHub now, which is the #1 code repository. And then they have GitHub Copilot, which is an AI code recommendation tool. And this is already showing massive productivity increases, and it's likely just the beginning. And then Microsoft's other business segment, which is basically their Microsoft 365 software bundle that they sell to enterprises and individuals, that bundle is going to get made a lot better through AI. And as they increase the value that they can provide to customers, they will find ways to monetize that. So Microsoft is involved in both ends of the chain, both the developer and infrastructure side and the end use case of creating software and bringing AI to businesses. And Microsoft is already starting to monetize this as well with a higher tier version of Microsoft 365 to get some of these AI benefits. And what that means is increased average revenue per user on their software suite. So Microsoft is already one of the strongest big tech companies in the world. They are a financial powerhouse. And this stock has been on a complete tear since really 2016. That was when their cloud strategy with Microsoft Azure became clear, and they switched Microsoft 365 into being more of a SaaS product with a subscription model. And really, since they did that, Microsoft's business has just taken off. Earnings per share have increased massively, and the stock price has largely followed suit. Revenue per share is growing at a 15% 5-year compound annual growth rate. Free cash flow per share is growing at a 14.86% 5-year CAGR. And this company is a free cash flow machine, bringing in $20 billion a quarter. And this is even while they have massively ramped up their CapEx spending. And by the way, most of that CapEx is going into AI infrastructure for Microsoft Azure and internal use. And still, this is a high free cash flow generating company, and that is set to likely continue to grow. And they use that to fund stock repurchases and a growing dividend payment. The Microsoft dividend is incredibly reliable and grows at 10% a year like clockwork. It is also very sustainable based on both free cash flow and net income. Current free cash flow payout ratio is just under 30%. So Microsoft, in my opinion, is one of the strongest businesses in the world. I have it as one of the core stocks in my dividend growth stock portfolio. It's actually 21.6% of that account. And you can definitely make the argument the Stargate news actually does help Microsoft. First off, OpenAI is one of the lead partners in that company, and Microsoft is the largest investor in OpenAI. The partnership is set to continue through 2030, and Microsoft has already invested over $13 billion in the company. And Microsoft is actually part of this Stargate initiative, although it's not currently known how large that role will be. But really the key point here is that Microsoft benefits from all this AI investment. The more intelligent AI becomes and the more affordable it becomes for the end user, all of that just powers Microsoft's business. And then before I finish stock number 3, I'm going to include a shout out to the other big cloud companies in Google Cloud and Amazon Web Services. A lot of what I said with Microsoft will apply to both of those companies as well. And both Alphabet and Amazon use AI internally to improve their businesses as well. And as we move farther away from the AI hardware, I do think that large-scale investments in AI infrastructure benefit the entire software industry. And just as one example for stock number 4, I have Salesforce, ticker symbol CRM. This is a subscription enterprise software company that has grown massively over the past decade. Revenue per share has grown at an 18% 10-year compound annual growth rate. Free cash flow per share has grown at a 21% 5-year compound annual growth rate. This company generates massive amounts of free cash flow, so much so that they just started paying a dividend, and I think they are set to be a dividend growth stock of the future. And unlike a lot of the companies I share today, they're not building out their own data centers. So they have not increased capital expenditures at all in this AI wave, but they are benefiting from the advanced advancements in AI. They are putting it to use for end users in the market. So as advancements in AI happen, there's going to be a lot of opportunities for companies like Salesforce to provide far more value to their customers, things that years ago were not even remotely possible. I think that over the long term, the real value of AI will end up going to the value they produce to end users. So whichever companies figure out how to provide and monetize that value. I gave the examples of all the other big tech companies using it internally. Another example I'll give is Adobe, which is adding AI to all of their suite of software. And again, in terms of investing, I would focus on companies which already have a great core business model where you think AI will accelerate that even more. Another example to shout out here would be Meta. They are one of the leaders in AI, but this is another example of a company using AI internally. They use machine learning to improve their recommendation algorithms in their social media apps, as well as improving the matching in their advertising business. So they use AI to make their advertisers more money by better matching them to their users. And if Meta makes advertising on their platform more profitable, that benefits the company. And then finally, stock number 5 that I'm going to share today is Oracle, ticker symbol ORCL. This is another one of the companies directly involved in the Stargate Project, and they have actually been much more of a leader in AI than I was expecting them to, frankly. That hasn't exactly shown up in their earnings yet, but they've been able to maintain their high growth of recent years. Free cash flow per share has been a little more iffy, but it remains very high. And this company has been increasing capital expenditures actually at a very high rate. Likely a lot of that is going to AI data center build out, but they can afford to do that as this is a company which generates $18 billion a year in cash from operations and $11 billion of free cash flow. And this is a long-term dividend growth stock as well, albeit they increase their dividend every 2 years, not every single year. But still the 5-year compound annual growth rate of that dividend is 10%, and it's very sustainable. That's a 37% payout ratio based on free cash flow and 41% based on net income. And I'm not as much of an expert on Oracle's business model compared to something like Microsoft since I'm not invested in Oracle. But from what I know, they are using AI throughout all their different business segments to provide more value to end users. That's in AI infrastructure, AI supercomputers, AI enhanced applications, leveraging all the databases they already host to help customers use that data in the training of industry standard AI models like ChatGPT, Grok, and Llama. And overall AI revenue is starting to become a big piece of their business. They expect it to reach $25 billion this fiscal year. And this is an interesting metric here, but it's kind of telling. They saw GPU consumption up 336% in the latest quarter. So that means they're getting a lot of usage out of this infrastructure. So again, just as a lot of the companies I mentioned, this Stargate investment is just going to improve the general AI infrastructure and future growth of that industry. And that benefits a lot of companies, and you could argue the entire world. So there's a lot to potentially be excited about. But as an investor, we need to make sure to stay rational and based in the economic reality of the businesses we invest in. You should definitely be cautious about overvaluation and potential bubbles, but there's also a lot of real economic growth and opportunity that will come from this AI revolution. So you got to do research in how you can benefit from that as well. And personally, I think dividenddata.com is one of the best platforms to do that research. If you want to try it out, you can get a 7-day free trial right now, which is only going to be available for a limited time. To get that trial, you have to use the link in the description or pinned comment of the video. And again, if you want to learn more, the tool is available at dividenddata.com. If you enjoyed the video, please leave a like and subscribe to the channel, and I will see you in the next one soon. Thanks for watching.